Today we're going to be going over 3 stocks that this massive hedge fund recently bought. We're going to go over the reasoning as to why they bought it, and then I'm going to give you my thoughts on each of these picks. Guys, if you're brand new here, make sure to hit that like button down below. Let's try to get 150 likes on this video. And also don't forget, we're running a huge promo right now in our VIP membership group, 67% off. Link is in the description down below if you want to see all the positions that I personally own. But anyways, getting to today's video, we're going to be talking about this investment firm called Parnassus. I probably am mispronouncing that, and if I am, let me know in the comment section down below. But these guys pretty much manage around $30 billion in assets, and they recently made some moves out there. They sold off a few stocks, they bought a few stocks, and we're going to be discussing that today. So the first stock that they bought is actually Microsoft. They picked up around 4.7 million shares of Microsoft, which equates to around $500 million worth of the stock. Their reasoning here is that Microsoft's unrivaled enterprise relationships coupled with comprehensive offerings from infrastructure to software should continue to drive growth for many years to come. And I really would agree with this statement right here. Microsoft has developed a lot of relationships with enterprises over the years with products like Microsoft Office Suite, Microsoft Windows, Skype for Business, and because of this they have such a large group of customers they can target with new cloud offerings. Microsoft hasn't had the best performance at the back half of 2018, and even so far in 2019 it's been good but not great, and this is why a lot of investors are specifically interested in possibly investing in Microsoft at this point. Now at one point Microsoft did actually hold the title of largest market cap company in the world. It might be at that again right now, I'm not too sure, but the point here is that it's such a large company, it has a lot of eyes on it, but it has promised a lot of growth for 2019 and beyond. So as long as they can deliver on this growth promise, I think the stock will be absolutely fine and it'll continue to perform really well. But if they do miss, then we could see a bit of turbulence here in Microsoft. I think it's a pretty smart move for this investment firm to actually go in and add in shares of Microsoft at around $100 per share, because I do think there's going to be a lot more upside in the stock in the future. Maybe not in the short term, but definitely over the longer term. Analysts also see about a 15% upside here in Microsoft stock, and that's fairly conservative upside in my opinion, because if the market continues to rally, I think Microsoft can be a much higher stock in 12 months from now. Their PE is also currently in the low 20s, which offers some pretty good value considering that they have a lot of segments growing at double digits, like their gaming segment, cloud segment, all that kind of stuff. So you're getting some good bang for your buck here with a large company with a very stable name behind it. So moving on, the second company that they bought here is IBM. So they picked up around 950,000 shares of IBM, which equates to around $100 million worth of the stock. So this is obviously significantly lower than the position that they opened in Microsoft, and that's kind of justified in my opinion because IBM isn't as much of a growth story as Microsoft is. Although Microsoft is so large already, they still have a lot more growth ahead of them in my opinion. IBM doesn't really have that same potential. Now the firm decided to buy some IBM stock because of their strong earnings, which could signal a bottom in the stock coupled with an upbeat guidance, which again supports this thesis. They claim that they pretty much took advantage of the negative sentiment out there in the stock market around IBM, and that's why they kept buying the stock at low valuations where they believed it was undervalued. They also say that they believe investors are severely underestimating the power of the Red Hat acquisition deal and the customers that come with the Red Hat acquisition. Now, I do tend to believe that the acquisition of Red Hat will help IBM over the longer term, but I do believe that they may have overpaid for this company right now. Although it comes with some large customers, although it comes with some great potential for the company, I think that the price that they paid may have been a bit too much and it might take them longer than expected to actually recoup that cost. So that's kind of where my opinion sits with IBM. It's not a stock for me personally, but I do see some appeal as to why some people may want to open up a position in IBM, especially with Watson and their whole kind of play here in artificial intelligence. Alright, moving on, the third and final stock that they actually bought here was Nvidia. They added around 3 million shares of the company, which equates to just under $500 million here as well. So as you can see, it's a very similar size to their position in Microsoft, so they do feel as bullish on Nvidia as they do with Microsoft. So they did say that they have been waiting for an opportunity to enter the stock, and with the recent dip, they did take a position in the stock, and they do believe that Nvidia has massive potential in graphics processing, data centers, and autonomous vehicles. And this is exactly in line with my thinking and my thesis on the stock as well. I made plenty of videos on Nvidia recently. I'm a bullish investor in Nvidia, and I do absolutely love the company, not only for the short term, but for the very long term as well. Listen to the conference calls, listen to the sentiment around their actual products. People love Nvidia products. Maybe the stock was overvalued at a certain point, but I do believe that it has corrected to a point now where it's possibly undervalued. Now, it's no secret that Nvidia did get pushed down significantly because of their recent earnings where they had to guide down twice from what they projected earlier. and as a result the stock did suffer, and as a result investors that were in the stock suffered as well. But at the same time, there were a lot of investors who were sitting on the sidelines when the stock went from $100 per share all the way to almost $300 per share. They didn't get a chance to get in at a price that they wanted, and now that the stock has corrected, all of these investors sitting on the sidelines have started funneling money into the stock. Likewise, I do believe investors that were in, say, above $200 per share have also started averaging down on their position to bring down their cost basis, and as a result, I think you have a lot of buyers in Nvidia stock right now. Really, in a nutshell, the long-term growth story in Nvidia is still intact. I'm still very bullish on the company. I support their thesis here and kind of the sectors that they see Nvidia growing in, which is graphics, data centers, autonomous vehicles, and of course artificial intelligence. And I think that Nvidia's products will not only be needed today and tomorrow, but also for many, many years to come, because the need for products that Nvidia produces isn't going away anytime soon. Now, as a bonus here, I'm going to talk about a couple positions that the firm actually closed recently. The first position was in Costco. Now, Costco is a solid company. I'm personally a customer in Costco. I have Costco membership. I love shopping at Costco. I get great bang for my buck. I get great quality products, great quality food. The experience really, in my opinion, is good at Costco. But I do believe the stock has run up significantly and is currently overpriced with a PE of almost 30. So I can't really blame them here for cutting their position in Costco. I do believe they cut out at a profit, but it wasn't as high as they expected. The second stock though that they sold was Intel, and this one I'm a bit surprised on because Intel isn't a stock that you're going to expect to double overnight, but it's a stock that pays you consistent dividends and has consistent slow growth over a long period of time. Its market cap, I believe, is over a couple $100 billion, so it's a large company, a very safe blue chip company, and it's a really good position to have in anyone's portfolio who wants exposure to semiconductors or chips, and they don't want to go dabble in stocks like AMD or Nvidia. So I really disagree with their choice here on selling Intel. I think it's a solid long-term play, but that's kind of exactly it. This firm is more of a short-term trading kind of firm where they want short-term profits, so I do see why they would sell Intel, but me personally, I would not be selling if I did have a position in Intel. So again, guys, if you are interested in my positions, I will leave a link in the description below to the VIP membership group. Huge 67% off right now. But either way, guys, thank you so much for watching. Hope you enjoyed this video. Let's get 150 likes on this video. Don't forget to invest positively. I'll see you in the next one.